I'm going to look at the AMC charts, give you what my analysis is, and then discuss American Eagle Outfitters too, just a little bit. I'm just gonna get going here, try to do this in one take. I've got so many things on my mind right now. First, I just want to look at the 15-minute chart and explain this terrifying pennant, or is it a flag? It's hard to say. Obviously, the flagpole is going to start at least here. I mean, this is a conservative spot to start the flagpole, is at $40, where the ascending triangle broke out to the downside. So if we start there, this is a big flagpole still. A low of 25 with a breakdown at 40, it's $15. If this move down extends the full length of the flagpole, that would put us at around $16. That would be a severe decline in the price. So I've been looking at this, scrutinizing it, trying to decide, is it a pennant or is it a flag? Because the pennant and flag price targets are different. So the top trend line would be the same, and that would be this one right here, and you can see it disconnects these highs. I'm gonna zoom in a little bit. We're gonna take a closer peek. I'm gonna do these circles where I see touch points. This is my MO. I like to do this. So there's one. Here's another one. So there's two touches right there, and then this high we got yesterday made that third touch point. And I was really cautious yesterday to say, hey, you know, this thing could break down, and if it breaks down, that could be really bearish. And this is exactly what I was thinking about when I was saying those things. It was exactly this situation. We saw the price fall. Okay, now, depending on which minor bottoms I form the trend lines on, will decide what the pattern is. There is a really good case for making this the flag. This would make a high and tight flag, which means it would be a high performing flag, i.e. the push down would be brutal. Because we have the touch points we need, and as you can see today would be a breakout down from that level, and closing below it confirms that. That would be terrifying. And I believe that could be the case. And you can see that this touch point would start back here, and there is this outlier, this low of 25.31. The price did reach down and then exuberantly bounce back up, okay? And when I say exuberantly, this is the kind of bounce that I was looking for when the price initially fell. If this bounce at 25.31 was 4 or 5 green bars like this, but it was on a daily chart scale, that would have been good. But really what we saw is a bounce and then immediately some consolidation, which does not bode well. So I'm willing to look at this price dip as kind of an outlier and not necessarily count it as a touch point, and that really cleans up our flag. The flag becomes very, very, very clear. And maybe we don't even want to use the dip that formed after that flag. That looks pretty good. Given the volatility, I think this might be a good way to express the price action. Now, if you want to be really, really technical and stick to these touch points, we get this rising wedge. And it's not quite the same. It's not really a rising wedge, it's a pennant, but it is pointing upwards against the price trend. And the 3 touch points on the top trend are the same. And let's see if we can't get a better lineup on the bottom here. We're gonna take that ultimate low of 25.31, and then we're gonna be looking for minor lows. And you can see that we might be able to say there was a touch point here. We started right here. Touch point here, and then this was actually a touch point, a false breakdown, a move back up above, and then we saw the breakout. You can think of it like this. A false breakdown essentially means the price moved in a way that was not true to the price. The price moved in a way that wasn't true to itself. So it had to come back to realign. And if the price had not moved down, but had rather bounced up a similar amplitude and then come down, this would have been good for our chart patterns. And so I try to think of these false breakouts and false breakdowns like inversions of price action. It's like, this was actually not the way it should have gone. You see the price pulls back into the chart pattern. Pullbacks are really common. So it's possible this is a pennant or a flag. They both have a similar meaning, and that is that the move next is down. We're gonna see a test of this $29 level. And this $29 level was calculated on October 22nd based on a symmetrical triangle. And I really never thought we would see this price reached. I never thought we would, but I left it on the charts because, after all, I am learning and testing Bulkowski's technical analysis and chart patterns. And sure enough, here we are, sitting right above it. And at time of recording, the price is testing that level in after hours. I have a strong suspicion, and I was saying this on Discord, that I wouldn't be surprised if the price moved below that level in pre-market trading tomorrow. And if that's the case, we're going to see a bounce in the AM. It'll hit that level and reject. And if that price level rejects, oh my god, buckle up. Adam Aaron and the CFO sold a ton of shares a couple of days ago, and those were on green days, right? So insider selling right now is really spooky, real spooky. A lot of people aren't going to like that. Yesterday I was saying also that we might see the VWAP turn against us, and that's kind of what we saw, right? In the last 45 minutes, hour and a half, we saw the price drop below that monthly VWAP, come up, test it, fall, and test it, and fall. Not great. And you can see that the implied volatility is rising here as the price declines. This has been a really important trend to follow the IV, the implied volatility. So it is not shaping out in a bullish way. It's just simply not. I can't look at this chart and say, yeah, the bounce back to 40 is probably going to happen. I can't even trade on that analysis because it's not in the charts. I know that there's a lot of people waiting for a spring to occur, but I don't know how that would work at this point. The RSI on the 15-minute ending today in the oversold region. Brutal stuff. Brutal stuff. Tomorrow is going to be very interesting. I'm curious to see where we're going to open. If there's a gap down, oh my god, a gap down tomorrow morning. But yeah, I'm just gonna, this is just it. This is just what I see. So what would the price target be? It would be low. Now I think it might be worse if it was a pennant, because the pennant has, well, it's a similar percentage mean price target. You see this? The pennant has a 35 or 32% percentage mean price target. And let's see here. Let's see what his measure rule says. He says compute the height from the flagpole basically, and then multiply it by the percentage mean price target, and then you apply that to the breakout. Okay. Now there are half staffs. He says the average time from the trend start below the pennant to the start of the pennant is 11 days. I'm going to start looking at this in the 1-day time frame and see how well this lines up. And I'm not going to worry about length of the video. I'm not going to worry about editing it. I'm just going to be really candid right now. I might as well be live, but I do want an opportunity to add music, and I know some people don't like music, but I do. Okay, so this was our pennant, and it doesn't look as clean on the daily chart, obviously, because you don't have the same definition you have in a smaller time frame. So he says the average time from the trend start below the pennant, blah, 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 11 days. Okay, so this is the bottom of the pennant. Let's go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Oh my god. The day prior, the 12th day, would have been the high that we fell from 44.43. Incredible. And I remember that price. That was the double bottom confirmation price. And we closed above it once, but it was a false break up and out, and so we fell back down. Incredible to see that this is lining up time-wise so closely. Okay, thus the trend before and after the pennant takes about the same time, but price does not rise so far after the pennant. In fact, the trend after the pennant is equal to or longer than the inbound trend just 30% of the time. So he's saying that there is a chance that, oh, he's talking about the trend after the pennant. Okay, and he's talking about a half staff going up, and what we're looking at is a half staff leading down, but it's also against the pattern, but I think that might be okay. So another 2 weeks of absolute massive downside. That is what this would imply. He says pennant tilt. Performance suffers when the pennant slopes in the direction of the prevailing price trend. And it doesn't. It slopes against the prevailing price trend. The pennant tilt figure to the right shows an example of price tilting upward in a rising price trend. Oh, okay, yeah, so it is okay that this pennant is tilting against the trend. This is actually a weaker pennant that we see here because the price trend is up with the price. And here we see the price coming down and the trend of the pennant up. So it's a strong pennant. It's not a weak pennant. Pennants perform best within a third of the yearly low for downtrends breakouts only. Okay, and that's like, you know, the lows this year were just crazy low, so we're not gonna get that. And here's an example. This is painful to look at. Jeez, I think even the spike in volume is somewhat there's like a semblance of that too. Let's have a look. So the volume begins to spike towards the peak of the flagpole, right? Yep, that's exactly what we see. There's even a green spike here in July. If you look at this chart, there's a green spike in volume in July. Prior to that, we do have a high green volume day prior leading to this pennant. And that was towards a minor high as well, just like in this example. And then point A would be where we started our decline from 44.43, and B would be the bottom, which was at 25.31. Point C would be the high yesterday that we saw at 33.92, and point D could be $31 minus $16 or $15. So like $15 to $16 price target. Like that's what this pattern is trying to do, and it's just picture perfect with the example, and that's terrifying to me. Oh my god. I can't believe it. I can't look at this chart and say it's going higher. I just can't in good conscience even entertain that idea. This is nuts. Let's look at the 1 day, the 1 minute. I mean, that's just brutal. Brutal. Oh, I owe somebody up here to be on my 1 minute chart. Let's see here. Let me go figure out who that is. All right, there we go. Got you up there, Siphon. So this was the 1 day chart, and you can see I have some patterns here, and this was how I saw it playing out. I saw this pennant, the breakout, resistance at the 50% retracement, 31.85, and then the price started to fall. When it fell below this green line, the December 2nd high, I knew that the price was in free fall. And there was a small consolidation, and this is actually a good example of a pennant in a half staff formation, where you see this incoming price trend. This is the flagpole coming down. Let me draw it just to be clear. And then the price continues to make a similar move. This is what I expect to see AMC do, is something very much like this. And you can see that today we almost fell and reached that $29 level. Insane stuff. So you know, this is my vlog, so I'm just gonna document exactly what I did today. So today I got my margin, and I didn't really understand how that all worked, to be honest. It's really interesting. The margin requirement for AMC is 100%. So, my entire account with TD Ameritrade is basically GME, Naked, and AMC. So that means that I didn't really have any margin to use, and so I wasn't able to make any of the trades I wanted to make. And I'll actually show you what those trades were right now. Yeah, let me just pause this again. This is what the board looks like. The whole intent here was to have trades expire weekly and run them a margin and then collect just like the money I made every week. So this trade was to sell a $35 call and then buy a $36 call. The vertical spread here is supposed to catch potential upside gains. So if I'm locked into buying 100 shares and then selling a call against them, right, and the price goes up, I want to make sure I catch the upside. So that's why I would buy the call, the $36 call. To help fund buy that call and make some money, I sell a put at an important level of support, that $29 level, right? So I sold the put $1 below, the strike's $1 below 29. And I have how much I would have hypothetically made had I made those sales, $104 and $100. So it's $204. And then the $36 call only cost $87. So there was a $117 difference in the cash, right? And that cash was just to be held. And should the price begin to drop through an important significant level, like the prior December 2nd's high, then I would buy a put. And so I did that as well. And had I done that, that would have cost me $92, right? I might as well just take away the decimals here and make it all consistent. So that would leave me with $23 of cash still to buy another put, and I could buy a deep out of the money put to continue to further hedge the position, because to start this trade I would have to buy 100 shares, and that would have cost $3,125. And that's the greatest expense in this trade, are those underlying shares. Now I wouldn't have to do that. I could trade this all naked without those shares, but in this particular setup, I wanted to do it covered, and that's what it would have cost. So the real danger is that the value of the underlying asset, the shares, could decrease. And that's why there's cash for a put. Now hopefully the price rises, right? And that $35 call runs into the money, and that the $36 call then begins to appreciate as the price rises. And the difference between these two I make because the shares were purchased at $31.25 and they're being sold at $35. So there would still be some intrinsic value being earned there, even if that call was exercised, if I was assigned. That is, that my broker exercised the contract. So here I am, and I'm looking at this trade, and I'm just gonna run it hypothetically, see how it goes. I understand that the price may tank to 15, and if I actually had made these trades, I would have closed all of these positions. But that said, I didn't do that. This didn't happen. So AMC today was down 8.9%, but this set of trades was only down 3.9%. So I was able to mitigate 5% of downside losses, and that's really good. This is a good example. This is what I would call a full trade. This is how I want to trade options. And I just need margin to do that because of the tremendous cost of shares, right? And then, you know, if the price never rose above 35, the most I would make is that 117, but I would still have made 117. And that's why I say that I would want to trade on high volume. Get 10 of these going. If I could get 10 of these trades going and the price traded between $28 and $35, you know, I'd be making $1,000 a week doing selling this trade. But that's not gonna happen. So yeah. So I have said this before. I have shares with computer share, book entry shares, and that's kind of my MOAS insurance. It's just, if it happens, I'm not gonna not have shares. And also, I actually like AMC as a company. I really do. I really think that given time, maybe 6 months, a year, maybe 2 years, the company can be profitable again. And that would be great, because if there are still tremendous open short positions and the price is like $5 and then the company becomes profitable, then those shorts are going to have to start closing. So I think the timeline for MOAS with AMC lies more in terms of when can AMC turn profitable over when do people speculate that the short sellers will have to close their positions. So I have those shares, and that's really like a passive accumulation strategy, very, very uninvolved, and I'm gonna rely on that in case there's MOAS. Because I wasn't able to use my margin to trade options with AMC, and it hindered my ability to invest in other stocks and make other plays, I actually liquidated my account. And then I bought a put. I bought a $20 put on AMC. And that doesn't mean I don't believe in the company. It just means that I think the shorts are definitely in control. The price is going to go much lower, and we're going to find a fair valuation for the price of AMC stock before it begins to increase due to any shorts closing. So that's just where I'm at, you know. My trading behavior is not indicative of what I think about people. It's not an indication of how I feel about the company. It's simply trading. I'm gonna go see Spider-Man on the 16th. You know, I was up late at night getting those tickets. Like, it's not, I have a hard time because online the community seems to be so committed to these ideas, just labeling people as a shill or whatever it is. And it's just really unproductive, you know. I've been a retail trader for years, long before meme stocks or the meme of stonks ever started, you know. Anyway, I just wanted to, I guess, say that more in a journal way than a for my viewers way. That also in line with that, I'm gonna go into American Eagle Outfitters really quick. Okay. So American Eagle Outfitters looks really good to me. I like American Eagle Outfitters, I do. I've played this stock before in the past, and I made money, and I made money today. I'm gonna start here in the 1-day chart, tell you what I saw happen. So there was this big gap down, right? And this is probably because the dividend wasn't as high as it has been in the past, and those people who are relying on those dividends are selling off the stock, and they're going to go find more profitable companies. American Eagle takes about half of its profits and invests them into its growth and returns about half of them for dividends, and I like that. That's a good, healthy balance. I agree with that ideology. So I saw the price come down and form this nice double bottom. And what I'm looking for in double bottoms is for the price to rise above the middle peak, which it did. And so I entered into a position right here. And immediately the price fell. You know, that's gonna happen. But the monthly VWAP was below, and I was expecting to see some support. And I was happy to see the RSI actually enter into the overbought level. Yes, I like to see it reach into that level, and it didn't reject. It dipped, came up, and touched it before rejecting again. And then I was hoping that the VWAP would support the price, and it did. And when the RSI fell, it didn't even hit oversold, and that was when I knew I was in good shape, right here. When the oversold region isn't met, that's pretty bullish. And we saw big, massive spike in volume as well, so I got really excited. And I just held. I held through here, I held through here, and then the price came up and up and up and up and up, and I sold right here. So I made money between, let's see here, 27 and 27.39, and I made 17%. So that's really good. I used a $27 call to do that, and 10 shares, which I didn't sell. I actually held on to those. I want to try to go long here, but I was stopped out at 27. And that's fine. Totally fine, because the price kept falling down, and I'm happy I didn't hold on to them. I'm glad I sold them. So that's what I saw here, and that's how I made my day trade today. I want to go into the 1-day charts a little bit here. Oh yeah, that's sloppy. Let's see if I can clean it up a little bit. That's okay, I'll just go through it bit by bit. So you see the low of 1850 here, 2020, and that's around the 2009 high. That's shown in the yellow line here, and there's another yellow line above it. This is the 2007 level high, and I'm actually really happy to see a stock trading in that same range, because it's not as potentially overvalued as other stocks. Right now, the markets are really high, there's been a lot of inflation, yada, 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 so finding a stock to go long on is kind of hard. So this stock is kind of near, 10-year, price range action, so it makes sense, I like it. Okay, so I see a descending broadening wedge here, and the price target for that would be 38.28. And you can see that this analysis would have been a great way to trade. If you saw this pattern coming up and you charted it truly, and by truly I mean you don't make the pattern fit, you just draw the trend lines when they occur, i.e. when these dips form, you just connect that line and then you wait. You don't move lines. Don't move lines. Don't move lines. Anyway, if you'd done that, you would have seen this descending broadening wedge and this price target of 38.28 be reached and just exceeded at 38.99. It's amazing. You can't make this stuff up. You can take Volkowski's analysis and just go to any stock, look at it, analyze it per his criteria, and then calculate price targets, and you'll see these things play out, and it's just insane to me. I mean, I believe it's basically the algorithms that he's studied. So he has a fantastic model to understand what's going on. So in red, we had this breakdown. This was a falling channel, a descending channel. And it just keeps going and going and going and going and going and going and going. And then right here, breaking down below out of that channel, Volkowski recommends shorting or selling when you break down out of a channel, downward channel. And so it had that, if a trader had done that, they would have done very well, having made money between the $27, $28 range down to $23, $24. That's pretty good. That's pretty good. And the price comes down and it forms this double bottom. And this is near a big retracement level, and I'll zoom out one more to the week time frame and we'll look at this too. And this double bottom had a price target up here at 72% of the height added to break out the confirmation. It's really, I'm not going to go into it, but you can see that the price just about reached that level. It did exceed it, but when it does exceed it, you see the big red, right? The big red. Big green big green, but then also just falls right back down to VWAP. And today was actually a red day. Like I made $17, not $17. I made 17%. I made on my calls on American Eagle on a red day. Boom shakalaka! Nailed it! I love getting it right. It just feels so good. You know what I'm saying? Clean up my chart a little bit. Oh, and I'm gonna back out to the 3-week real quick. Sorry for the rambling, and it's a longer one, you know. So, okay, 2020 low, $6.05. Holy cow. And then the run up to $38.99. And I made money trading this stock somewhere around here. I don't really remember, but it was before the meme stock frenzy. Now the price rose, and that's where these white retracement levels are. So the 50% retracement, to see a double bottom at the 50% retracement from this big move is really good. I really like that. And that gap down might actually not even be that bad. What I expect to happen is to see a gap back up, and on the weekly chart it's not a gap, of course. But on the daily chart, this is a gap down, and it'd be cool if the price would gap up again. There'd be like an island bottom. I won't go into that, but yeah, so that's why I see an American Eagle right now, and AMC. This is just my vlog, and I'm not a professional, just a retail trader. Thanks for watching.